Hello friends, Vlad is here with you. This is the weekly review for the first week of October 2011, and the first week of October will bring the new plan of Bernanke on. And well, we all expect for that. Now Bernanke is going to sell the short-term bonds and to buy the mid-long-term bonds, and everyone is waiting for that to see how it is actually going to affect the market. And until it happens, it should begin on Monday or Tuesday. And until it happened, let's take a look on the charts and let's try to understand what do we have for as possible trades for the upcoming week. Let's begin with the euro dollar. The euro dollar on each of the biggest time frames looks very bearish. It looks like we are going all the way to 130 or maybe even lower. If we take a look, this is the weekly chart. If we take a look on the daily chart, here the situation is interesting. Why? Let's analyze this continuing divergence. This is the beginning of continuing divergence. That's clear for everyone. Now, the first attempt of the divergence to make the move was successful, right? This is the first leg of divergence. It was successful. Interesting. Now it makes down the move. The continuing divergence continues. But we should remember, as continuing divergence continues and the previous attempt of the divergence to make the move were successful, we should be patient now and see how deep it will go. This continuing divergence will definitely take the euro up, but it is not going to happen probably from here. This is based on the theory of continuing divergence. Let's take a look on the candle. What do we have? We have a Marubozu, right? Almost a full Marubozu. The close price is the highest, right? The open price is the highest and the low is the lowest, almost. And this is almost a full Marubozu. Full Marubozu means that the sellers are probably will look to finish with their sales, right? Like an outlet, right? And the buyers will take the action. Everyone sold, and now the buyers will be looking to buy. For further down move, I still think we have to close below the 133.50, probably, approximately. This is the support. And if we have the close, then we can aim the 130 or even lower. Actually, it is 129.50, something like that. So that's for the bearish and for the bullish move. If it does break the 133.50, close below it on daily chart, we are going all the way down for 130 or even lower, around the 129 plus. If it does not break the support and play around here and create a bullish candles with this continuing divergence and possible cross up back for the stochastic, then we can aim up. With all the problems in Europe, especially in Greece, I get a feeling it's, well, the down move is sure. As for now, I recommend to stay neutral, or if you trade the intraday, it's okay, but for long run I recommend to stay neutral for the upcoming week at least. And if things will happen as we analyze, as we plan, break below 133.50, close below, or a bullish candle, then we will take action and we'll begin to trade. What about the pound dollar? This pair does not act so well. Well, it keeps some bullish power, but from other side it does look like a bearish move. We have a sideways move here on 4-hour charts. A break up or below these boundaries will take the pair probably to the direction of the break. We have had several false attempts, so the next break or the next break would be well, most likely reliable and will take us all the way down. On weekly chart, by the way, we still also are very bearish, as you can see, but it looks like we are going to see some kind of correction here within this range before the next break. A break below the 154 will open the gates to 150. Still, remember, as we discussed on previous weekly review, we still have this trend line that should be achieved, and this is around 150. Let's continue for the next interesting pair, the dollar against the franc. After the Swiss bank intervention, the dollar gathers strength against the franc. How long it's going to continue? The weekly chart is still bullish. But let's go down for the daily chart. The daily chart has for us several resistances. As you can see, several ranges all the way here, right? With all up, with all step, we have more and more and more cells. We are going to see here this divergence being created. You can attack with investor style from these areas, right? Or just wait to reach the areas, create bearish candles, and then begin to attack. As deeper this divergence will go, and this continuing divergence will continue, the deeper the correction we will get in the future. Do not forget that the natural trend of the Swiss franc is up, which means the dollar Swiss should go down. The pair dollar against the franc should go down. This is the natural. Why? Because of the very huge strength of the franc, and because of course it was and probably will for long run will be safe haven for investors. So this divergence is very interesting. I do believe we're going to see more up. How deep it will be, no idea. It might stop just right here in the 092.50, maybe take us higher to around the 093 plus, or even for the next very steep high, the 097. Who knows, maybe we are going to see the parity level reach again before the big crash. Anyway, this divergence is something to watch. I do believe we are bullish now, but get ready for the next serious bearish move. It's getting closer. Let's take a look on dollar Canadian, which probably will do the same. This pair I would not touch right now. I will explain why. The weekly chart is clear up, the daily chart is clear up. It will be continuing divergence here, but it looks that it is still too early to enter. Although we have here a Marubozu, which means we are going to see some intraday correction, most likely. And if we take a look here, that's the levels we have. This is the resistance 1, this is the resistance 2, right here. And as we go higher, we have several areas here. This pair is going to play some in between these areas, correct itself most likely, and continue up. So I will wait to attack the down move once this continuing divergence will go and the pair will continue to move up. If it happens, the sell will be guaranteed. Until then, stay bullish. There is nothing other moves. And it looks right now, once again, for intraday, maybe the 1 hour chart, it might correct after the Marubozu, but it should still go higher highs. So stay tuned for this one. It looks like a good opportunity. The euro against the pound, a pair that broke again below the 0.86, this time with the old Bollinger Bands open and without Marubozu, so it does look bearish. Weekly chart also did good sign. As you can see, it opened the Bollinger Band. We still have this support annoying little bit, right? But it does look bearish. A break below this support, which is 0.8570, should take us lower, and I expect this pair to go all the way to 0.83 and probably to the 0.80, which the investors look so much to. So this pair does look interesting. Any correction on the intraday chart, on the 4-hour chart, might provide a beautiful sell. Once again, with all the problems in Europe, it does look like the natural way. Any retrace should be an opportunity to sell with a stop loss above the 0.83. Stop loss at 0.83, 0.8750, sorry, 0.8750 should be a good sell opportunity with the stiff supports lower as targets. It will take time, as we're talking about euro pound, which a pair that does not move easily, but it does look a good direction. About the Australian and the New Zealandian, both look very bearish, and Australian looks like to break the 0.97 right now, and we are probably going to see the down move. But as on euro, same story here. We have a Marubozu, we have a continuing divergence. How the wick is going to open? Is it going to break powerfully down more and more and take us to 0.94, or is it going to create a bullish candle, take us up first and then crash again? Who knows? No one. And this situation is created just because the fact that Bernanke is going to begin his action this week, and this is how they get prepared to, with the Marubozus, with outlet, right? The New Zealandian, same story, as you can see. The support holds, and who knows how it's going to be. This is actually the beginning of continuing divergence. Is it going to continue much lower and continue this divergence there? Who knows? The weekly chart does look bearish, but Bernanke's effect might affect really here. And as you can see, we have a trend line which should meet this the move, and who knows how it's going to finish. So let's see for these pairs how this week begins. It does look very bearish, but the optimism after Bernanke's beginning might take this pair for a nice correction, first of all for the 20 MA of the daily chart, maybe even higher, and only then might bring the next step of the down move. Now, these are the main opportunities. Of course, don't forget the dollar Singaporean I discussed about. We are getting closer and closer for the very critical areas, and the continuing divergence here is also amazing. These are the range, this is the range, and we are going to see bam very soon. Stay tuned for this pair. Of course, the dollar against the Norwegian krone as well, with the resistances higher with this continuing divergence, and of course the dollar against the Swedish krone as well, and the Danish krone. Everything is looking amazing. As higher it goes, as deeper the correction will be. Let's take a look on the indices. If we take a look, this is the S&P 500 and this is the Dow. Dow closed again below the 11,000, but the daily chart still holds support on each of them. As you can see, still holds the support. Yes, it does look bearish. Yes, it does feel bearish. Yes, the fundamental all bearish. But once again, Bernanke is about to begin his purchases of the long and mid-term bonds and sell the short-term bonds. How is it going to affect on the mood of the investors? No one knows. That's why we must be prepared for everything possible with this, with the opening of this week. The problems in US, the problems in Europe that actually make the pressure on the investors with a possible new recession just too strong. But Bernanke is Bernanke, and surprises happen. Don't forget it. And if all look bearish, it might surprise. If it breaks this support, there is no question we are going much lower. But if there is no breaks, we are going to see probably big retrace. So let's stay tuned for any possible thing at the beginning of this week, and then we will look for good opportunities to join. That's all, friends. Many opportunities once again on the market. We are now in amazing period to trade. Do not stay out. If during the summer I did say stay out of the market, now I say be in, friends. Take risks, because the possibility to earn the big moves here is amazing. Stay tuned for the critical areas, stay tuned for any possible change, but do take risks. It is the time to be in the market. It is the best time to be in the market. And if on 2008 you were thinking how people make money with the recession, here you might have the answer. Just be in. Make sure you are in. Do take risk. Do not risk more than, I don't know, 2% per trade, but do it. Do risk, and risk only the money you can risk. Of course, never risk money you can't risk. Do not risk your saving. Do not risk your food money. Right? But do risk money, even if you have, I don't know, $1,000, which is the lowest amount I can think about. Still, take the risk, because this 1,000 at the end of this situation might become several good thousands of dollars, which will allow you begin to trade as professional trader. Friends, once again, thank you very much for your time watching this video. I wish you an amazing week. On Friday we are going to have the non-farm payrolls. Do not forget it as well. And I'll see you on the live room, and I wish you all the best and amazing profits, good moves, good pips, and good week. Thank you once again. Yours, Vladimir. Bye bye.